So this is from Cointelegraph. Bitcoin options open interest hits peak hours before giant $1 billion expiration. Oh my God, it's the largest amount of open interest we've seen since the last time we had the largest amount of open interest. Now, it is a sign of a growing marketplace to continue to see growing open interest and access to derivatives, such as options contracts. And as options are the most popular form of trading in the United States among professional traders for the most part. So it's a good sign of a growing market. So the CME Groups Bitcoin Derivatives Market is seeing new all-time high interest from investors, which is a good thing to see. As I said, this is a sign of a growing marketplace. And this is highlighted with their options contracts leading the charge. They have recently hit a record $1 billion in open interest on the CME, and expiration is now just one day away. It happens tomorrow. Tune in next time for the bloodbath. According to data published by Glassnode, sorry, I don't think there's multiple nodes, just one, and it's made of glass, right? The ByBit futures market has its open interest at record highs of 100 million, and their options over interest now stands at 1.2 billion, suggesting that demand from investors for these products are continuing to soar despite an uncertain mood in the market. Soaring cases of coronavirus, potential re-shutdown of the economy, time to short some Bitcoin. So the overall gains to this level of open interest in the futures markets has been mostly driven on the demand side for options. Options have become far, far more popular, which would indicate that investors are particularly confident in their projections for Bitcoin's price for the remainder of 2020. For example, if one is uncertain about the general economy, but pretty certain that their moonshot is going to do well, you would buy the heck out of calls. If you are feeling uncertain about everything, you would buy the heck out of some puts, particularly if you're holding the underlying asset. Long exposure is no good in a bear market. All right, so in an article published last month by Cointelegraph, again, at a time when Bitcoin was, let's say, seeing similar downward price pressure like we are seeing this week. The details in this article talk about how options data showed just a 9% chance that Bitcoin reaches 20,000 in 2020. What was really neat too, and we can look at this over on Skew, just see really who's, not this one, it's Bitcoin options research, right? Let's see. Here we go. We can see Bitcoin options open interest by strike price. And we can still see here is $10,100 with 13.2 thousand Bitcoin in that contract. And we have 11,000 with 16.2. And then we can see 12,000. But look over here to the right, $75,000. Somebody bought a call option for $75,000. Somebody bought a call option for $50,000. Somebody bought a call option for 40, for 32,000. 4.4 thousand Bitcoin in the 32,000. So it's pretty good to know that there is apparently easy money out there. So only a 9% chance per options data that Bitcoin would see new all-time highs of $20,000 this year, right? But despite this bearish outlook of Bitcoin trapped well below all-time highs for the remainder of the year, futures are still booming and attracting more and more interest, record open interest, right? CME Group reporting on their open interest hitting new all-time highs yet again on Wednesday. This would have been yesterday. Or as Arcane Research confirmed, in its latest blog post, that their data does confirm that an increased demand for options is behind the CME's record-setting open interest. And they point out furthermore that tomorrow is going to mark a huge day in the options market as $1 billion worth of Bitcoin contracts is due to expire. And CME accounts for close to $300 million of that action. So a lot of desire for volatility coming in tomorrow. Some people are going to win, some people are going to lose with the right options hedge and perhaps longing volatility. Just saying. There's going to be some profitable movements out there. Now, if we look back at historical data with regards to Bitcoin derivatives and their expiration events, it is typically coincided with pretty high volatility, right? No directional bias, but just high volatility. But this time around, the major factor at play is the macro market sentiment, right? And where the global economy heads next. Obviously, the kind of big fear in the marketplace today, which we seemed to initially be seeing with a sell-off. I remember kind of the messages coming in this morning when the market started tanking. Everybody's like, oh, it's finally happening, because the news reports started rolling out yesterday. And honestly, even into last week, if you were paying attention, that we're going to see a spike in coronavirus cases, that the easing the lockdown procedures is the wrong move, and that we're going to see this second wave, et cetera, et cetera. So I'll belay comments on that for the current moment because I have quite a few. But in recent months, we seem to have found that there is major correlation between Bitcoin and traditional stock markets. And the current sentiment seems to be mixed, with most citing an uncertain outlook for the future in price, thanks to a resurgence of COVID as the leading cause of investor trepidation moving forward. So any calamity on mainstream markets is likely to spill over to Bitcoin. And we've talked about this before, right? I have issues with this whole, Bitcoin being correlated to the stock market type issue because there are situations, there are inflationary issues, which Bitcoin by its nature is designed to protect against, where you see divergence. For example, if you go back and look at the financial crisis of 07, 08, 09 and the recovery from that, you can see that the SPY bottomed after gold, and gold diverged and began moving up far quicker than the SPY did. Now, obviously, we didn't have Bitcoin at that current point in time. So those are events where people are uncertain about the traditional markets. Whereas something like a pandemic makes you uncertain about every market, right? Because this is not just financial chaos and disaster and stocks and bubbles where you would see flooding into other assets. This is where you see those who don't have long-term exposure to long volatility get hamstrung because they're directionally imposed and not volatility imposed. And also, deflationary events pull money out of all markets, right? So in March, when everything sold off, there was not a safe haven to go into except for long exposure to volatility, right? This is the method in which if the markets move in any direction significantly, you make a lot of money. Most of the time, longing volatility will draw you down, right? But it's a good part of a balanced portfolio because it is going to perform extremely well at times when your long exposure in other markets does not do well. And typically, historically, long exposure has been the better thing because the world moves forward and prices go up, whereas shorting is short-term, typically fundamentally based. This is just kind of classic investor stuff. Yeah, finding high correlation in a pandemic doesn't really convince me. And I have a lot of issues with the statistics and the methods in which I've seen a lot of this SPY and Bitcoin correlation, right? Because they're not taking the fundamentals into account. A lot of these charts just show you the SPY and Bitcoin, but they don't also show you how gold and silver and ETFs and commodities are doing the exact same thing. So it's not that Bitcoin's correlated to SPY, it's that Bitcoin's correlated to everything else. Everything is correlated together. It's a coefficient. Sometimes you get less correlation, right? Sometimes you get negative correlation, but everything is certainly correlated in the fact that everybody utilizes the same unit of its accounts, and everybody utilizes the same quote currencies to trade these things around, and everybody utilizes the same base currencies to trade these things on and trades them on the same market. So there is no way around correlation. If we want to take a huge philosophical step back, systems thinking, everything is interconnected. There's only one massive system that runs and everything is a cog in the system. But that's maybe a little bit too much for the purpose of this show. Yesterday, of course, Bitcoin did see quite a bit of a sell-off, potentially driven by talk of miners preparing to sell more coins, along with tokens associated with the Plus token Ponzi on the move again through the mixers. So there was plenty of news events to have triggered the dump to 9K. Despite all this, though, it seems that Bitcoin is mostly moving alongside equities and related COVID news. I really don't think it's the Plus token scandal. I really don't think it's any of that is making the markets move in such a significant fashion. Still, crypto markets are bracing for another impact. Everybody can feel it. And this monster $1 billion in options is set to expire tomorrow. And wild volatility may return to Bitcoin yet again following weeks of relatively stable price action in the mid 9,000s. So you guys need to find some long volatility exposure, and you guys need to find some way to be on the right side of the market, whichever way it moves, or limit your downside, right? If you just trade your system, you can largely ignore the fundamentals. There are going to be options. There are going to be opportunities like right now where long volatility exposure is really attractive, right? All right, let me know your guys' thoughts in the comment section down below. Do you guys think, A, that this options information is completely worthless, like more open interest than the last time we had open interest? Oh, at the end of the year, we always need a news story. Look at all these options contracts that are going to expire. Or do you take it more seriously in the context of the fact that we are stagnating and we see open interest rising, indicating confusion among traders? Does this tell you to step back from the market or to dive headfirst into the market with your directional bias? Let me know down there. I'll comment.